What's going on, guys? Ben here with HighStrike Trading, and today we're going to take a look at my 3 top highest percentage trading setups. So what I mean by trading setup is something that you identify on a chart to inform a decision that you make about buying or selling a stock. So in general, there's 3 types of trades that I like to start with beginners. So range trading, breakout trading, and reversal trading. So these are very simple. I'm going to go over them in just a second on my phone. We're going to break down each one of them and see what actually makes them tick and how to identify them in a real-time chart. So number 1, guys, we're going to look at a range trade. So what we're looking to identify in a range trade is a support and a resistance, and that can come in 2 different styles. We can have either parallel lines, right, which look like this. We have our support down here, our resistance up top. They can be slanted upwards, they can be slanted downwards, or they can be at intersecting angles, right? And sometimes they look like this, that's called a pennant. Sometimes they're a little bit downward angled, that's called a descending triangle. Sometimes they're like that. Either way, we're looking to identify a support and a resistance. And what a support is just a line that historically, psychologically, people tend to buy at, right? So you just draw a line and estimate drawing a line through the low points in a stock's trend. Resistance is just the opposite. It's a psychological point at which people sell the stock. So if you just look at where all the highs connect, try and estimate either a line or a zone on the top and draw your resistance line. So in a range trade, guys, the simplest way to do it is to just draw your support and resistance and buy at support, sell at resistance. So in a parallel horizontal setup, it would look like this. We're gonna buy here, here, and here, and we're gonna sell here, here, and here. And this is a very oversimplified version of this. Just wanna get that notion in your head now, right? And so same thing would look for in an uptrend, right? We would buy here, here, and here, and sell here, here, and here. Same thing on a downtrend, looks like this. We would buy here, 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 sell here, here, here. In a pennant, it's a little bit different, right? So we're gonna have the stock potentially trending something like this, right? We're gonna have to be able to identify the support on the bottom and the resistance on the top, and they might not be parallel lines. They might be intersecting lines. So it's a little bit trickier, but either way, we're buying here, here, and selling here, here, all right? Same thing with the descending triangle. Buying here, 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 selling here, here. Same thing with an ascending triangle. Right, maybe the stock looks like something like this. Gonna buy here, 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 sell here, here, here. All right, and I know this is a little bit messy here, but it is just the gist of a range trade. And the second thing, you're probably asking what happens when one of those lines is breaking, is that's when we get to a breakout trade. So a breakout trade, we're going to use all of the same patterns and setups, but this is exactly what it sounds. A breakout trade is made when a stock breaks a support or resistance. And what we're actually doing is using that stock's momentum and breaking that barrier and just going with the momentum. So for example, if we're going to use the same types of supports and resistances that we had established for the range trades, we can have our horizontal lines, we can have our uptrend lines, we can have our downtrend lines, we can have our pennant, we can have our ascending triangle, we have our descending triangle. Right, and the stock is trending in the zone, right, and that's all great and stuff. We're doing our range trades over and over, and then finally we break out on one side, right? So say we break out on the upside here, the stock continues and pushes through that resistance. What we're doing here is we're taking that stock's momentum and going with it, right? Simple as that. That's a breakout trade, and we're gonna buy on the breakout. Same thing with an uptrend corridor, right? We're looking at the corridor, we're tracking support and resistance, and then one day it just breaks. We're gonna buy the break and just take the momentum and go with it. Usually when there's a psychological price point like a resistance, when that resistance is broken, everyone out there thinks that the stock, has a lot of momentum, and so everyone will be buying into the stock. You wanna use that to your advantage because you can predict the movement of the stock. After it breaks, everyone's most likely going to continue buying that stock in the upward direction because there was such a psychological barrier, and now that that barrier is broken, people are more easily convinced to buy into that stock. And what makes the stock go up? A lot of people buying it. So you just want to be there before everyone. Same thing on the descending corridor, right? We have our stock bouncing around. Finally, it breaks through the resistance here. We're just taking that stock's momentum and going with it. We're buying the breakout. It's a little bit different when we have intersecting lines. And so in this case, we're going to be looking for a pinch point. Let's look at all of our pinch points here using a blue color that I picked out. So pinch point here, pinch point here, pinch point here. And what is so special about these pinch points? Well, the pinch points determine the place where the support and resistance can no longer coexist. So if a stock is moving through time and time is not changing, right? We cannot delay time, and the support and resistance are set to collide at a pinch point. That means that either the support or the resistance needs to break at or before the pinch point. So let's just say that we have our stock trending in this pennant, right? And we get to the pinch point. There's no way to go except for up or down, right? So we have two options, up, down. Usually there will be a lot of volume and momentum associated with a pinch point being broken. So we can either buy with the upward momentum or sell with the downward momentum, whichever happens. Same thing with an ascending triangle, right? We have our stock trending in here, and then we get to the pinch point, something has to give, right? And we break out on the upside. We can either buy with that upwards breakout momentum here, or we can sell with the downwards breakout momentum. And a lot of you guys are probably not familiar with the term sell to open. I'm suggesting that on a breakout you sell. It doesn't mean that you have to already have a position open. You can do something which is called a short sell, which we'll get into later in another video. But basically what that is you're betting on the stock going down. You don't have to already own the shares to sell and make profit when we get a downward breakout. And then finally, just the same thing as the uptrend triangle, we have the downtrend triangle. Same thing. Trending like this, we get to a pinch point, we either break out on the downside and we can sell that momentum, or break out on the upside and we can buy that momentum. Those are the basics of the breakout trade. And guys, the final trade here, that's one of my highest percentage setups, is the reversal trade. So what we're doing here is we're actually waiting for the stock to change directions, identifying the changing of the tides, right? So let's just take the most common case is we have a downtrend that we're making lower lows and lower highs, right? Just as typical downtrend, and then something happens where we may bounce and then make a higher low, right? So the first thing that we're looking to identify in a reversal trade is a higher low. Use my awesome green color for this. So we have identified that higher low. The reason that this is a higher low is because we have two lows that are being formed. All right, this is low number 1. This is low number 2. And low number 2 is higher than number 1. The next thing that we want to identify after the higher low is a higher high. Not very complicated. Take our blue tool here. This is a higher high. So what we have here is we have made high number 1 and high number 2. And in this case, high number 2 is higher than high number 1. So that's a higher high. So you see what's happening here, right? So we had that downtrend with lower lows and lower highs, and we finally started making some higher lows and higher highs, and then this is where we're going to buy into that newfound uptrend momentum. So this is assuming there's a few other things that we can do. We'll talk about in 1 second to confirm this reversal. But once you confirm that reversal, we're going to buy into that uptrend that we newly found, right? Because we think that the stock may have been undervalued while it was going through that downtrend that we were just seeing. So we're going to wait till it reverses, get the good price, and then carry it back up. A few pro tips to successfully identify a reversal. One thing you want to do is identify 3 green candles on the 1 minute time frame in a row. Right? And so if you haven't learned about candles, we do a separate video on that. But if you can identify 3 green candles on the 1 minute time frame, you're golden. That indicates a lot of upward momentum and likely the reversing of a downtrend. The second thing, guys, that you can look for to confirm a reversal is, did the stock bottom out at a historical resistance? So what a historical resistance is, just like we went over in the range trades and breakout trades, is a price point that people tend to buy at where the stock bounces and goes back up. So if you see something like that maybe a couple days ago, right, that's called a historical resistance. If the stock ends up stopping out, bottoming out at a historical resistance, there's a greater likelihood that it's actually going to continue that uptrend and reverse from the downtrend, okay? So real quick, guys, just to recap, reversal trades are the most complicated of these 3, but the thing we're doing, we're looking for a higher low followed by a higher high, and we're buying into that momentum. Bonus points for identifying the bottom of the downtrend at a historical resistance, and for identifying 3 green 1 minute candles indicating a lot of upward momentum. So there it is, guys, the 3 highest percentage performing trading setups out there in my opinion. If you like this video, please toss a thumbs up and subscribe to the channel if you haven't done so already, and I'll see you in the next video.